But what if I go ahead as a room rental operator and I go and get just a standard landlord policy from State Farm? And even though it is a room rental property and I've got 6 rooms.
The second they find out, they send non-renewal. So their first thing they're trying to do is reach out to us and say, hey, I know it may be more expensive, but I'd like to be covered.
People are looking at their co-living product as, someone who's just owning a rental property. This is a full-on operating business. That's where our insurance policy becomes vitally important because you can start packaging them all together.
Can you talk about the program that you developed?
It's awesome.
A lot of investors, they have one property, but their goal's more. This program would not be each time you get a house, you got to get a new policy. This would be a schedule on the same policy,
Okay.
which is a pretty cool thing.
Mm-hmm.
The more properties you get, the less expensive the policy kind of become. And we can schedule these policies if you own houses in multiple states. It doesn't matter what state it's in or anything like that.
Mm-hmm.
You can still schedule on the same policy.
All right, welcome to the newest episode of the Co-Living Investing Podcast. I am your host, Ashley Jeffers, and this is a special episode on insurance. Insuring room rental properties, insuring co-living properties. When you invest, the best thing you can do for yourself is make sure your investment is protected. So with me on this episode, I have Rob Pearce and Matt Osman. And so, Rob, you are an insurance agent.
Correct.
Matt, you are a real estate agent.
And insurance agent.
And insurance agent.
My insurance license.
Double whammy.
So you guys have partnered up in this co-living space. Tell me how this partnership came about.
I have been a co-living real estate agent for at least 5-6 years now. And have probably closed over 50, 60 different homes for investors. And what I started realizing was after we closed and after they got the house operating, that a tree would fall on their house, and or they would lose rent coverage because the insurance agents or the companies would find out that, hey, you've got 7-8 people living in here, and we didn't sign up for that.
Right.
So I just noticed that there was a lot of hardship afterwards. And another partner of ours, Trevor Higgins, you know Trevor as well, being on the lending side, he was also seeing that. And so being associates with Rob just kind of naturally led to conversation, which kind of led to how do we get these houses actually insured properly?
Correctly.
And that's where Rob comes in because he's the owner of his agency for, I don't even know how long you've done it, but
12 years now.
And has written full programs, and he'll explain all that. But so once we found the need, it was just, how do we get it done now? And that's the one.
Okay. So Rob, I have so many questions.
Sure.
So let's start with the fact that there aren't many insurance agencies out here. There aren't many insurance products available that cover co-living properties. Can you explain to us why?
Sure. It is limited. The way everybody was doing it, like we were kind of talking before, is that they were going through standard market. So standard market does not really necessarily like the liability portion of this. So, a standard market being like a Steadily or a Foremost or something like that. But once you get over 4 unrelated people living in the same house, that's where they say, we're no go for this, know? So, and then, on top of it, there's very few that want to take on that risk.
Dig into the risk, the liability.
Sure.
Like, what are they worried about?
Exposure.
Okay.
So more people unrelated living together, they look at it as exposure. So they look at it as their liability limit is going up. So and then that's when they say we're not a market.
You think about it too, they've got increased usages on all of the systems, piping, HVAC, all of it gets that. Then you have
who's coming and going,
potential tenant frictions. And potential claims that could arise out of situations that happen like that.
Okay.
So there any number of things. Once you start adding more and more people, it just adds to the possibilities of
something going wrong.
Something going wrong.
Yeah.
And the insurance they are all about mitigating their risk.
Sure.
So you really have to go to a specialty market for this.
Okay.
When it becomes a co-living home is 5 or more people living in it that are unrelated. Mm-hmm. That's really when it comes that co-living. And what we're doing is we're moving from a standard personal lines policy basically to a full-blown commercial policy.
Okay.
That's basically who's the only people who are going to take the liability on it anyway. Mm-hmm. I don't really see that changing for quite a while.
Okay.
I don't see anybody really getting behind it. So it's basically, if you think about the home that you have, it's basically a mini apartment policy.
Sure.
But for these houses and for the co-living space.
Okay.
And there's the income part of it too. Like you're generating so much more income per property when you have this room rental model that they're not going to want to cover that type of loss out of, in their eyes, a standard single family home should have people living there, have the amount of people living there. So once they see that, and then the potential for all that money, they're going to make it.
Well, we want to make sure there's 2 big things covered. Basically, their loss of rent income, which is huge. So, you do have a situation that's got to be mitigated. You have to bring the whole restoration crew in there, to take care of it. And you want that loss of rents income, especially if everybody's got to move out for 3 months while it's under restoration.
Yeah.
So that's a huge key component to it. Also, the general liability part. Making sure you've got enough to cover if a major event happens there.
Gotcha.
And we've just gone through so many different things where the insurance companies, if you have the wrong policy, they're going to do one of 2 things. They're you have a claim, they're going to either not pay it, or they're going to pay it, and it's going to be a really, really big hassle. Can drag on for months until they finally pay it, and in both of those cases, they're going to drop you
either way. So,
either way, yeah.
So what if? I'm not encouraging this.
Yeah.
But what if I go ahead as a room rental operator and I go and get just a standard landlord policy from State Farm?
Sure.
And even though it is a room rental property and I've got 6 rooms, they're all full. They're all full. Mm-hmm. But I don't know any better. Like, I've got other rentals and I've got a landlord policy on those. Mm-hmm. What could happen? How do I get found out?
Sure.
If I have this regular policy on this room rental property, like, is that how big a gamble is that?
It can be a big gamble. As fast as the co-living room rental stuff's coming online. Mm-hmm. I mean, it's really growing quick. I mean, it really is.
Exploding.
As fast as that's growing is as fast as the insurance companies are getting hip to it as well. So,
and finding ways to find you out.
Yes, they're going to do, and that could just be in the form of just a general annual inspection.
Yeah,
if they have
numbers on the doors.
Yeah.
That's all these key locks and what all these key codes doing. Yeah.
A lot of cars parked here.
A lot of cars. Yeah.
Yeah.
None of you people look alike in here.
they're gonna figure it out.
Yeah.
Yeah. The insurance game's been around quite a while, so they get hip to this stuff, and the second they find out, they send non-renewal.
Yeah.
I mean, and it's so, and they know this is going on. They know that they're insuring a lot of them, so they're trying to figure out which ones they are.
Gotcha.
So the best thing to do, and this has been a big flood for us recently, just because people are knowing, or they want to be insured correctly. Sure. I mean, everybody wants to be insured correctly.
Absolutely.
So they're finding out that they're not. And so they want to go, they thought they were for a long time. And then, they find out I'm not. So their first thing they're trying to do is reach out to us and say, hey, I know it may be more expensive, but I'd like to be covered.
But I think too, people are looking at their co-living product as, someone who's just owning a rental property.
Yeah.
And, they're renting it out for a typical rental. I mean,
but
you are talking about, this is a full-on operating business with
Yeah.
lots of moving parts and high incomes
Yeah.
that are generated from it. And so in order for them to pay out those types of claims,
Sure.
they need the policy to match kind of what the income is producing on all these assets. And then
Sure,
there's
the loss
people,
of rents. Yeah.
exactly. And so when people are scaling up, especially, that's where our insurance policy becomes vitally important, because we can start packaging them all together.
I was going to say that's something we should definitely talk
Let's
about.
get into that.
Yeah.
Can you talk about the program that you developed?
Sure. So it's
awesome.
yeah. I mean, it's working out really well for everybody, because a lot of investors, they have one property, but their goal's more. You know, and that's pretty much everybody I've talked to.
Yeah.
My goal is multiple properties. So this program would not be each time you get a house, you got to get a new policy. This would be a schedule on the same policy,
Okay.
which is a pretty cool thing. The more properties you get, the less expensive the policy kind of becomes.
Sweet.
So it's, you'll see normal rates for adding another house, or, so you'll see a lot more normal rate, because the first home that you're putting on there, it's going to come with all the general liability and everything like that. So it is more expensive.
Okay.
But say you add a second home, it's not a doubling of the policy or anything like that. So, which is good. It's going to be more of you'll see something much more favorable. And we can schedule these policies. If you own houses in multiple states, it doesn't matter what state it's in or anything like that. You can still schedule on the same policy.
How many states you cover?
We are licensed in 44 states right now.
Okay.
Yeah. So
This policy is
44.
nationwide, though, because it's a commercial product, so we can service all 48 continental states for sure.
And if there's not a state we're not located in, it's not a problem.
You can
licensed
refer
there.
you can refer them to an agent that does.
We'll
service the
become
state.
licensed.
Just get licensed.
You just get
there.
licensed.
Yeah.
there. Okay.
Yeah.
Yeah,
Okay.
it's not an issue. And that goes for entity names too.
Absolutely.
So for tax purposes, a lot of people will have a different LLC for each property.
I'm one of those people.
Yep. I mean, it's a smart thing to do.
Yeah.
So we can schedule those different entity names, no matter what state or what it is, on the same policy.
As long as the common ownership is the same. As long
that's
as,
correct.
If you have a long-standing partner that you work with on multiple investments together, and you two are the same names.
Like members on the LLC?
Yeah.
Just on the LLC.
Okay. And then
So
we-
100% common ownership is a big thing. Basically, because if you're investing with somebody else, and then on one property, and then another person on a different property, those two people don't want to be a part of a risk that they have no vested interest in.
Right. That makes
So
sense.
yeah, so I mean, it's so common ownership is a big deal. But as long as you keep it with, a business partner, it's simple.
Okay.
Yeah.
So we kind of touched on it. We've said that policy for co-living properties is going to be expensive than a traditional more expensive than a traditional
To
landlord
start.
policy to start, right? How much more expensive? Like new investor
Great question.
Matt just got me into my new co-living investing property. How much should I be prepared to pay over what I normally would pay for a traditional rental?
Great question. A lot of different factors with that.
Okay.
So it's going to depend on the age of the home, the size of the home, systems of the home, updates. If you got a brand new roof, you're going to get better pricing than an older roof. But really, I mean, if you've got new construction, you might not see that big of a price increase.
Okay.
So it's where you're going to see a price increase is a larger home that was built 50 years ago. It's just kind of where, that's where you're just going to see that, those swings really.
Because you're just waiting for something to break.
Well,
I
mean,
mean,
so many unknowns too in between the bones.
It's the same with, your personal line stuff. Everybody wants new construction. All the insurance companies love new construction. They'll fight over it. But it's when you're seeing those larger, older homes with some age on them. Yeah.
So you're sending out an inspector to inspect the property to determine what my pricing is? Or
No,
can you just
so-
look at my appraisal that I got done on the property?
We'll get it quoted, and the inspection usually happens on the back end.
Okay.
Won't change the rate. They might. I can't say that they might go out there and find something they don't like. To where
Maybe don't put numbers on the doors just yet.
at that point in time, though. Well, with the co-living product, it doesn't matter.
Right.
Really?
You can, yeah. With the co-living product, it's fine.
So this comes up. Sorry to interrupt, but
Sure.
I got to touch on this point because this comes up all the time with co-living.
Yeah.
People ask me all the time, should I convert the dining room and the living room to rooms before the appraisal or after the appraisal? And the answer is after. Like, the appraiser needs to come up there, come into the house, and it needs to look like an actual home. For the insurance agent, what you saying, Rob?
Sure. For the insurance side, it's not going to matter.
It doesn't matter.
No.
Okay.
For the insurance side, it's not going to matter. They know what they're getting into. The insurance companies that are going to do this type of insurance.
Yeah.
They know what they're getting into. They know it's going to be co-living. They know the garage may be a bedroom. I mean, so it's more on what they're looking at is more from is this property something we want to insure? Is it not? And for the most part, it's all good because everybody, when they're closing on these houses, what's the first step? Renovation.
Yep.
To make sure it's up to par, that
Rentable.
and then
rentable. That is safe.
That's safe. Yeah.
Smoke detectors, carbon
Exactly.
dioxide
Absolutely.
detectors.
Exactly. All those things. So they're gonna update what needs to be updated. So it's really a good model that it goes that way. It's not somebody buying a already 9-bedroom house
Right.
and just immediately trying to rent it out. They're going to do some cosmetics to it. They're going to fix what needs to be fixed, and then they're going to find out too. Right now, roofs are a huge deal in insurance. The age of the roof is a huge, huge deal.
Okay.
It's tough to get insurance for a 30-year-old roof. I mean, it's just, there's a lot of companies out there that will basically just decline.
Period. Like, this is a
Fix the
Thanks for
roof
playing.
and we'll jump on the risk. Roof's 30 years old. Tough to find.
Not even fix that 30-year-old roof. Replace it and call us back.
Yes.
Right.
Replace it.
Yeah.
Call us back. We'll do it. We do have some groups out there, though, that'll give you a 30 to 60-day window to replace it. So if you've got a closing that you need to get done, they'll close on the house, but they'll send an inspector out there, and then they'll send you a non-renewal saying, show us proof that the roof's been updated. Pictures usually suffice. So send pictures in, and they'll drop that non-renewal.
Okay.
And they'll stick on the risk. Yeah.
What if I buy a property and I come to you day one to get it insured? At the time I come to you, it's only 6 bedrooms. A year later or 2 years later, I've got a little bit more money to play with, and I want to take that property because it has so much square footage from a 6-bedroom to a 9 or a 10-bedroom. How are you going to look at that deal?
So that's a great question. With commercial insurance, the insurance company's way of basically auditing this is for you to submit new applications every year.
Okay.
So instead of them coming in doing a full-blown audit on you, they have you do a renewal application.
Yeah, you're essentially
So it's going to
updating
get
the numbers
in
for
that
them.
renewal application.
Yeah.
Yeah.
You've got higher income numbers. You've got more bedrooms,
liability
more
because of more
space.
rooms, right?
Correct.
Yeah.
So they're going to look at that on a year-by-year basis anyway. So it's going to get caught in a renewal,
Okay.
which is good. I mean, it's great that no one's getting actually audited. This is kind of the insurance company's way of auditing these individual accounts. So,
Gotcha.
yeah, great
Okay.
question.
Okay. Matt, are you seeing anything from your clients that you're getting them connected to these properties, they're closing, coming to Rob to get the insurance? Anything that you're seeing where you want to call out and say, hey, investors, don't do this, or make sure you do this in preparation for making sure the house is insurable?
Yeah, like Rob said, I do think having a handle on the systems, the ages of the systems, and if you have some form of ability maybe to negotiate some money for the new roof and
For upgrades.
to get those things done,
Mm-hmm.
you can provide invoices of the work that's going to be done, to help that. And yeah, just during your due diligence periods, you can go back and look at, I think, what's it called, a clue report.
Mm-hmm.
You can get clue reports pulled and see if things were done on the house that might raise red flags ahead of time.
Previous claims that might have been around. That stuff pops up.
But on top of that, especially on a lot of the older homes, you go in and you might have PVC piping, but then that might be connected to copper somewhere deep underneath in the bones. And, the furnace is working well, but it is dated. Is it something that actually needs to be addressed and brought up to speed and brought up? I mean, obviously that does help in the perceived value of the home and everything, but doing that just helps you get a lower rate on your insurance.
Well, and for the investor, it's peace of mind that they're not going to have to spend all their time while they're trying to run this business of, getting tenants in and out and things like that, that they're over the house working maintenance all the time.
Right.
So, I mean, it's
problem after problem after problem.
That's a landlord issue of from all time, though.
Yeah, for sure.
But really, to me, the problem was actually getting proper coverage. Yeah. Actually getting, because essentially these people were paying into nothing.
Yeah.
They were paying into nothing because as soon as something happened on their policy, they either got dropped or they weren't handled or taken care of, and then they got dropped.
Yeah.
So
nothing worse than throwing money in the trash.
Yeah, you're throwing $1,000, $1,200 or more a month. So just not having the proper coverage was immediately the problem. And so just telling the investors to think like it is an actual operating business and not just a rental house that you are buying.
Right.
And I think if people can go and protect themselves that way with that mindset, plus it gets cheaper when you scale up.
Yeah.
It just gets better and better.
Right.
Look at it as a commercial space.
Absolutely. Every time you expand into your new building, all you're doing is expanding the liability. I mean, really, the heavy cost is just to establishing your policy and just getting it started. But these homes cash flow ridiculous amounts of money in some instances. And for you to not properly cover that type of income, 24 grand a year, sometimes in cash flow, like, no,
that's not smart.
That's let's be better.
Who pulls the clue report?
The insurance carriers.
Okay.
Well, yeah. So
you will counsel your clients to. Let me ask you this way: at what point do you engage Rob in the process?
Generally once we go under contract and we're starting to get through due diligence.
Period.
But towards the end, though, we'll go through the investigations and negotiate for all the concessions and stuff. But that's really where we'll figure out if the juice is worth the squeeze. And then we just got to let Rob know what's going on with the house and where we're at in the process. And then he just go ahead and issues his normal quotes.
Yeah, if it's under contract, we're ready to work on it.
Yeah.
Okay.
If it's
and we'll try to do a lot of upfront work to get the ages of the system so that we can get a quote out as quickly as possible. And a lot of times these homes too, one thing we didn't talk about too is a lot of times the homes, when you are closing on them, they haven't been renovated yet. They are not co-living homes yet.
Right.
So
the majority of them.
Correct. But once you start getting, like you said, past that fourth, that's when you absolutely need to switch coverage. You could be on a standard landlord policy in the beginning, but once you get past that threshold, you really do got to switch over or you're not properly covered.
Is that starting at room number 5?
Yep. That's our process for everybody. Most, I would say 99% of these, everybody's doing renovations before tenant move-in time. So, and during that time, that's kind of our bridge to, we can still write you a personal lines policy, property under renovation or under construction, whichever you want to say. And then until they can stay on that policy too, until that 5th tenant moves in.
Okay.
That's when it is considered that full-blown co-living.
And they need to.
But that's when it's on the investor though, because then they've got to let us know that they have finally gotten to that 5th tenant. Mm-hmm. And so it takes probably a little of keen follow-up on our end, but also we need the investors to be able to communicate with us, when these things are happening so that we can move them forward.
And everybody, when this first started, everybody was kind of like, no, I'm just gonna ride this policy out, and we're kind of thinking that's fine, but it's just not going to cover
I
you.
don't think you'll
Right.
get anything.
You know what I
Find
mean?
yourself in hot water.
It's
You
not
keep that
gonna-
wrong policy on there too long.
Exactly. And
Yeah.
now I think everybody is a lot more receptive to it now because I think there's been a lot of issues.
Yeah.
There's been issues from, the investor standpoint all over the country. I mean, and so now everybody's a lot more receptive to, okay, this is what I need.
Yeah.
Yeah.
And truthfully, it's to be expected with the ages of the homes that some of the, we're transforming single family homes that, some of these homes have been established in neighborhoods for 40, 50, 60 years or more.
Right.
Yeah, it's going to get messy potentially in there. So,
For sure.
You know,
I don't think a lot of people know about you. A lot of new investors in the room rental investing space, they don't know that there is a co-living investing or co-living or policy suited for co-living investment properties. So
we're trying to get it out there as best we can. I know Matt and our team's been really hitting
social media, the co-living groups, and
Yeah,
just trying to get. I'm just trying to educate.
yeah,
right
Just
important.
and the more and,
Know
and
what your
it's
business
and it's coming on more and more every week.
Yeah.
So it's and I think a lot of that is, I mean, us getting our name out there for sure is a big one, but I think a lot of it too is, like I said, everybody's starting to be a lot more receptive to, I need something that's going to cover me.
Yeah,
It's peace of mind that you're actually covered, and I feel like the savvy investors, the ones that know how to protect their investment, they won't see this as a heavy price, especially ambitious ones that are looking to scale,
right.
because it's going to protect them down the line, all of their
A
profits.
heavy price is a tree that falls on your roof and it's not covered. That's a heavy
That's
price.
a problem you don't want to have. I can imagine.
One missed mine. That crazy windstorm wind gust we just had. I mean, it was inches from the corner of our
Oh,
sunroom.
Lord.
Oh boy.
So
That's yeah.
So when we're talking about a traditional policy, I'm used to down payment, maybe not a down payment. I'm used to having the option to pay quarterly or pay monthly. The
Or your lender
policies or the lender paying,
Escrow it.
escrow it. Are your policies, do they have that same flexibility?
They do.
Okay.
So on the commercial side, a little bit different. These policies all have to be paid in full. But the insurance companies do offer financing options.
Okay.
So with commercial, it's got to be paid in full, but they do have the financing option. Rates vary from state to state.
Mm-hmm.
So some states, good rates, some not as good. And I mean, we haven't even really talked about Florida yet.
I was going to ask
so
about Florida. I was like, do you cover Florida?
We do.
Wow. Brave.
Everybody who lives in Florida knows Florida insurance, and so it's not like we're surprising them too much. If they live in Florida, they know how it works in Florida, and
And they're used to the cost.
the cost, and then just the wind pool is what Florida's all about, the wind.
Yeah.
And every lender out there wants you to have that wind coverage, but not every insurance company wants to offer the wind coverage.
Right.
So in some situations, it can it's a little bit more work. It's a little bit more cost for sure.
Mm-hmm.
But I think everybody who knows Florida knows that insurance is just more expensive.
Gotcha.
Yeah. Same with coastal, communities in South Carolina.
At a beach house.
Yeah.
for the beach houses.
Any type of coastal community
Yeah.
that's in that hurricane zone is going to get price heavier. I mean, even in the Midwest, Tornado Alley.
Yeah. Yep.
Because you're going to see a lot more cost on, in your Texas, Oklahoma areas than you would here.
Gotcha.
Yeah.
Wasn't our client in Houston? They forgot to put the wind. Was it they forgot to put wind on it, and then he got hit with
can't stand when I see
$15,000.
Yeah, I can't stand when I see stuff like
Forgot
that.
to put the wind coverage.
No, it was probably. I mean,
Well, that's how he said
Not
it.
say anything
They
bad.
forgot to do it.
but that comes down to a broker too. At the
I was going to say,
end of
would
the
the
day,
insurance agent suggest it or give them the options and say, hey,
yeah.
do you want these additional coverages?
yeah, wind's a big thing.
I think so.
We don't do any houses without wind coverage unless we are specifically asked. Say they don't have a mortgage, they don't have any kind of loans on the property.
Mm-hmm.
They can potentially self-insure if they want to. I would not recommend
Why
that.
would you want to do that?
Because they're just not paying money for insurance. But it's so in certain, so we've had people say, "Hey, I don't want wind coverage because I'm just going to replace the roof on my own," or it's with the deductible that I'm going to get on this, it might not make sense to have wind. Rarely does that happen, but
Right.
I've seen it.
Okay.
So, but yeah, so we're gonna push to make sure everybody's covered, 100%.
Okay. So
Replacement cost too.
gotcha.
Yeah.
So the current insurance company that I have right now, I went with them because there aren't too many options in the market
There's not.
as far as insurance companies that cover co-living properties.
Right.
So do you anticipate that insurance companies will at some point catch up and there will be more insurance companies out there, especially the bigger ones like a State Farm or an Allstate, that will catch up and say, hey, yeah, that co-living thing is really taking off. We really need to get up to speed on this and offer coverage. Do you anticipate that happening anytime soon?
Not anytime soon.
Okay.
Not anytime soon. They are currently they are adamant against it.
Because of the liability.
Mm-hmm. Because of the liability.
Yeah, they're naturally risk averse.
Yeah,
Lenders are gradually starting to get their way into building investment products for co-living or to allow roomers. A lot of times they just couldn't quantify the income properly. And there's the same thing with Airbnb. But, before AirDNA, they had no way of comping a single family rental. Well, now look what came because of that. I'm assuming that we will see similar leaps in lending, but also insurance, also legislative.
But it'll take years.
It'll take years, but I think the lenders will kind of start it. Insurance will have to cover that, start by the money, and then by that time, legislation, hopefully lessens a lot of like the occupancy rules around the different various cities in the country and such. So I see it as just being at the ground floor of where the potential of access to policy, products. It's
insurance
still
companies. New. It takes them a long time to wrap their.
Yeah,
no. Change is not something they're real quick to adapt to. It's going to take them a little bit of time to wrap their heads around something that's even a little bit newer concept.
It's the wildest thing because the affordable housing crisis that we're in this country, it's not going away anytime soon.
No, I mean, it's a great thing. Co-living is a great thing.
These room rental properties that are offering affordable housing solutions, like we don't have enough of them.
Oh, I know.
Right? And so it's kind of like, insurance company, why aren't you up to speed? But it all comes back to liability. I get it.
It's the risk.
It's a wild kind of, just like, are you not seeing what's going on in the housing market? Or not you, Rob.
Yeah. No.
But just, talking to insurance companies in general, like how are you not?
They're starting to see.
They're not more of an appetite for this.
And what they're going to do is wait
for others
and see how this. Wait and see how this goes.
Yeah,
is what I'm thinking. And then if they see something that's okay, this is a big piece of market share that we need to get involved with, and it doesn't seem like the risk is really that high. That's what it's going to take for them to come around to it and say, okay, yeah, we want a piece of this.
Gotcha.
But there's specific companies out there solely for this, that do have a higher risk tolerance, higher risk appetite. So they're loving it.
Yeah. Yeah.
We'll see as long as they can mitigate their claims, and it's all good business for them.
Gotcha.
They're going to see that. They're going to see that trend.
So someone wants to get in touch with you, Rob.
Yeah.
Matt. How do they go about getting a quote from you? Like, hey, I'm interested in potentially using this property for room rental investing. How do they get in touch with you to get you to run a quote for them?
Sure. So our agency is Williams Insurance Service.
Okay.
And like I said, we're currently in 44 different states. That we're writing in actively on the, commercial side mostly.
Mm-hmm.
We have a little bit limited options on, personal line stuff, but that's not really what we're doing here anyway. So it's, it's good that we're already have done a lot of business in these states, so we know how each state is kind of reacts and things like that. So to get a hold of myself and Matt, it's you can reach out to me, Rob Pearce at williamsins.net. It's actually R Pearce, Pearce at williamsins.net. Or just call our office. It's 803-366-2146. Yep. And Matt has a Williams email address as well.
Yep, it's MAT@williamsins.net. I'm also a realtor here in Charlotte, so you could reach out to me on the various, I'm out on Facebook. I'm with Caldwell Banker, and so and I'm also I'm always in the Facebook groups, kind of poking around. So you'll see me in there as well, and you might see me with Sam Weaker and his Scale Your Real Estate team.
And we've got a whole team that's dedicated to just this.
We'll make sure that your contact information is in the show notes.
Sure.
So any parting words as far as advice to investors?
Yes. Make sure you're insured correctly, because it's a mess if you're not. Yes, it's like anything in life. You don't want to really find out the hard way.
Right. This is business. So
yeah.
There are expenses that comes with businesses, and insurance protection is probably the most important expense you'll pay.
Yeah, and it's our goal to keep the prices as low as we can.
Yeah.
That's why we don't even go to the co-living product until we absolutely have to.
Okay.
Because we want to keep the price as low as we can for all of our clients. Because, I mean, if we're going up on price, they're going to go somewhere else.
Yeah.
So we want to,
be competitive.
Yeah, we want to be competitive.
The ideal of the product in the policy is to allow investors to grow better and faster, and they can do that by keeping more money in their pocket. But so every time that they're getting a new property and scaling up, they don't have to establish a new policy. They don't have to go through all of that all over again. It's just popped under one policy.
Yeah,
it's perfect for someone's.
And these aren't scrub insurance companies we're using. They're all AM Best A+ rated.
Okay.
Yeah.
So you'll insure a property with 4 rooms or less?
Oh yeah.
Will you insure the investor that is just starting out and they have a room that they're renting out inside of their primary residence?
Yes, we've ran across that several times.
Okay.
And what I've ran into with that is just it's the type of loan that they have. Mm-hmm. It can be a little bit different than just a typical secondary or something like that. Sometimes they want them to have a primary homeowner's insurance policy. Okay. Especially if they're one of the residents, that live in their residence and rent out their homes. But we have not had issues with that yet. So,
because I get that question.
We've seen some.
And I've always kind of you should talk to an insurance agent about that, because the question is, hey, I want to rent out just one room in my home where I still live. Should I be looking at that one room as a separate business because I will be generating income from that one room? Or should that one room be a part of the homeowner's insurance that I already have? So you have a solution for that.
We do have a solution for that.
Yeah.
The more layers that you add on to it, the trickier it can get sometimes. So if you have a room that you're renting out, and then your home is in an LLC name, but it's your primary, it's just, there's a couple, we certainly have companies that'll write it.
Yeah.
But sometimes the more things you have going on, it can shrink the market a little bit. Mm-hmm. There's always somebody who's going to write it.
Yep.
But it's just, you might not have as many options.
Gotcha.
Yeah.
Cool. Matt, Rob, Thank you both so much for coming.
You're welcome.
Ashley,
Thank
thank
you.
you. Thanks for having us.
This was informative. I learned a
Good.
lot. I needed, when I found out, Matt, what you we're getting into now with the insurance and partnering with Rob, I was like, you gotta come on the show ASAP.
Yeah, no,
Yeah.
thank you. We've been,
Right?
we want to get the word out. We want people to be properly covered. I mean,
Yeah.
it's otherwise it could be just disaster for these investors. And we see a need and we want the help with it. So thank you for allowing us the space to kind of get the word out a little more about co-living insurance and co-living Protect Plus, because we're not stopping. We're going to keep talking to you guys as much as we can.
And Matt knows I do it by the book. And I drive them a little crazy. It might drive them a little crazy, but yeah, we do it all, kind of by the book. It's just,
And he's written don't let him sell y'all short. He's written an unbelievable policy, and he's done similar things for other companies, large companies that are nationwide companies before.
yeah.
And so he's dotting those I's, crossing the T's, and
If you don't, that's how you get in trouble.
exactly.
Exactly. Well,
Exactly.
you're definitely welcome to come back. Both of you are welcome to come
Thank
back
you.
anytime. You're definitely
you.
now our subject matter experts on this show when it comes to insurance, because it's just that important. Like a bad insurance situation can blow up a whole investment
Absolutely.
and
Yeah.
can cause the world to hurt,
Absolutely.
financially.
Exactly, and that's not what we want.
Right.
So
Keep money in your pocket.
we've got. I'm sure we can do a whole other segment on a whole other thing on the insurance. So.
We'll have you come back.
Yeah.
All right, y'all. Thank you so much for joining us on this episode of the Co-Living Investing Podcast. Make sure you like this episode and also make sure that you subscribe to the channel. And we'll see you in the next episode. Peace.